Hi guys, thanks for tuning in to another episode of Nuggets News. Well, another big week behind us. We've got so much macro and crypto news to get through. A lot of it is intertwined these days, as you know. I just wanted to remind you that a lot of our long format content has become really popular to digest on podcasts. So all our videos are uploaded to podcast as well. I'll try and timestamp these wherever possible. And if I haven't done it and any of you guys want to do it, just drop your Bitcoin address and I'll send you some Bitcoin as a thank you. So we do welcome a few hundred new subscribers this week joining us on this crypto and financial education journey. We've got our 12 days of crypto Christmas running. So congrats to everyone that won prizes last week. And this week's question is on our Facebook, Twitter, and Instagram, and that's all free to enter. Let's get into the local news where Australian students recorded their worst results. So this just shows that those worries I've got about the high-paying jobs not being here, and now our education system is failing our students 3.5 years behind places like China in mathematics, and it's maths and science, those subjects that we have to focus on to compete on the global stage in technology. So, my wife is a teacher. We do talk about these things, but I'm interested to hear your thoughts. Why do you think this system has become so bad in Australia when we're spending so much money on it? Now, the ACCC have been really busy of late. Coles and Woolies using your data to, against you in these loyalty programs, and more consumers are becoming aware of how their data is becoming valuable. And I think this theme is going to be so topical over the next year or two. Grilled is the latest chain accused of underpaying their staff and keeping young workers in these underpaid roles through traineeships. So we know that Aussies haven't got a wage increase in real terms for a number of years. This just adds to the problem. We've seen so many companies, big and small, underpay their workers of late. Optus have been fined $6 million for scaring customers into thinking that their broadband would be disconnected. Commissioner Haynes said that Australians have lost trust in governments, banks, and corporations. And look at all these stories that we're continuing to report every week. Jetstar threatening to strike over holidays. I hope none of you are disrupted by this. There's nothing worse than busy airports when you're trying to visit friends and family. And again, it is a case of these staff wanting a pay rise. We're seeing that pressure on all these workers. Retail sales are the saddest since the recession, so we're hoping that more people would get out and spend over Christmas. We've got a few more weeks yet, but a good article there by Roger Montgomery pointing out that at the moment, people just aren't spending and we are reliant on retail. Subprime loans are now attracting more and more investors because of the search for yield. So I've covered this topic a lot on the channel, but it's now those mum and dad investors that I don't think realize what they're getting into. They just want their 5% a year. They can't get it in a bank, and now they're chasing riskier and riskier products. And these are the negative side effects of negative interest rates that we've spoken about at length on the channel. A great article here by the CEC talking about CoreLogic's figures versus what may be happening at the banks. So as I reported about the RBA possibly bailing out the Aussie banks, we're not sure still what's happening there. When we have a look at the actual movements of different suburbs and the median house prices, we know that because of the liquidity requirements of banks, that when houses fall 5 or 10%, that actually puts a real strain on their mortgage books. And was there a crisis meeting? We've heard these rumors about them saying we've got to do everything we can to get housing back up. Otherwise, our banks start to become in danger of not having those reserves and having to call in these mortgages. I just want to show you this one quickly here. Someone sent me this about this live AI webcam in Perth. They're trialing things like this in Sydney with the new traffic, phone cameras and whatnot. But I think a lot of Australians are completely unaware that they're already being surveilled and what's happening with this data. It's all being kept. They build a social profile on you. It's a target for hackers. These discussions just aren't being had at a time when the amount of data on all of us is continuing to increase. Falling productivity numbers are clouding the economic recovery. So it doesn't matter if we print money and whatnot. We need innovation, we need productivity, and the numbers are confirming that is just not happening. That's why we're not seeing wages growth. Australia's economy can't be fixed by stimulus alone, says former Treasurer boss Ken Henry. You guys know the story. We need more innovation and more entrepreneurs. It's going to do no good throwing more money at a broken economy. Now, ANZ are the latest ones to shed more than 700 million in loans to thermal coal projects. So this is a leaked document. Last week I spoke about these overseas nations that are now getting rid of Australian bonds because they don't like the money that the government is spending on coal and where that money that they're investing is going to. So this green investing theme is now actually starting to impact economies. And obviously we are really vulnerable to that because of our reliance on things like coal. So these ideologies of different countries and investors, it's another headwind that at the moment, unfortunately, Australia is subject to. Now, Canada is a very similar economy to Australia in terms of resources and demographics and whatnot, and they've had a terrible jobs report. This surprised a lot of people, worse since the financial crisis. So they haven't had to cut interest rates as aggressively as Australia, but I think that is all coming, and this is maybe a glimpse into the future of what's happening in Australia with them losing 50,000 jobs, in the private sector. Scary stuff there. Now, we spoke about China defaulting on these bonds last week, but it's now confirmed that it is going to be a record number of bond defaults in 2019. So all this corporate debt, it's all been borrowed. Unfortunately, they can't pay it off. What happens to those investors, to those companies? Can they get more financing in future? Are US investors going to get angry and not lend to them again? All these things create friction in this economy that was trying to be globalized and opened up, and now we're putting up barriers and, upsetting each other once again. It hasn't upset Russia, though. Russia and China continue to cozy up. I've got the book behind me. I've spoken about the Cold War and the resources, the mega powers. China and Russia have all those resources at the moment. And countries have these ideals with these sanctions, but when push comes to shove, they have to buy the gas if it means that there's a cold winter and they can't get it from, say, the US and whatnot. So these relationships are really important. Speaking of fossil fuels, this IPO is breaking records. $25 billion worth of shares sold for a 1.5% stake, giving this company a valuation of $1.7 trillion. So with all these unicorns, the WeWorks and whatnot, is this something else we're going to look back on and think, what were these investors thinking, investing money at these valuations? Are we going to turn to more and more renewables at a time? Is this the last ditch effort of Aramco to pull in all this big money because they know that they're probably, using less fossil fuels ahead? I'm not sure what I think, but this is one that I might actually be looking to trade and possibly short, and it has been added on eToro, I believe. Now, blocking Russia's access to SWIFT would be a declaration of war. So this is coming out of the US now. We've seen Russia, the BRICS nations, talk about launching their own version of SWIFT. They're starting to experiment with, central bank digital currencies and whatnot. But the US, they have all this power, and unfortunately, it's being eroded. And how they react to the people that continue to do business with these countries that are evading sanctions and working around the US system still remains to be seen. Now, India is another country that is booming. I've got a great interview for you coming out this week, but unfortunately, their GDP is also turning down. The global slowdown is hurting all these developing nations. We've seen some leaks confirmed that Turkey is looking to get some gold for their gas. Once again, trying to work around US sanctions on Iran this time. Central banks piling into gold. Countries wanting gold for payment, turning away from the US dollar. This theme is just continuing to play out every week. We know that Hong Kong's economy is in recession. We've also seen tourism collapse now because of this civil unrest. We don't want to see that. UK sales down, collapsed most on record. Again, these are surprises that people weren't expecting. Biggest drop in 25 years. What is going on with the consumer? Why are they not spending? It's a real worry that governments and politicians haven't really seen coming. Now, the German banks have had no choice but to start charging their retail savers negative interest rates. So we know that negative interest rates weaken the margins on banks and it hurts them. So they're having to pass that on to consumers. And if this ever happens in Australia or the US, it's the ultimate catalyst for people that have had no interest in Bitcoin and gold to say, okay, my bank's now charging me. It's time to get out of the bank and put my money elsewhere. German industrial production year on year, another worst reading since the GFC. This is meant to be the powerhouse of Europe, and manufacturing industrial production is declining. We've seen 800,000 protesters take to the streets in France because countries are realizing they don't have the money they promised to these pensions. And talk of cutting back the pension, talk of raising taxes. The yellow vests join in these marches as well. Civil unrest, it is coming to a country near you. And it's all because of finance, money, the system that is working against the majority. Now, the US has threatened tariffs on a range of French goods. So we'll get to a story in just a second about why this hurts the consumer, but what is going on here between these countries that used to be friends? Again, this global trade, all of a sudden, well, if you're going to do that, I'm going to tariff you on that, and it is just the consumers that hurt at the end of the day. The last thing I want to mention about the US was this statistic. I knew it was high, but 423 million guns in the hands of Americans. That is really high. And when we see these civil unrests, 800,000 people marching in France, what happens when we get 800,000 people or a million people marching and clashing in the US? It really does worry me. If you live in the US, are you worried about this sort of stuff? Do you live in a nice neighborhood? Have you got a great community? I just really worry. In Australia, we got rid of all the guns. But I know in America it's so entrenched, and all the bad guys now have guns, so you can't take them away from the good guys. This is one of the arguments. But yeah, I don't want to get in this and make it political, but really a staggering statistic that I didn't know it was that high. Another thing that I wanted to bring to you here, because of the profit-driven nature of all these corporations and franchises. So this is a random journalist who found this out. The chicken strips in Subway are 43% chicken. So this wouldn't have happened back in the day when we had these regional, you go to your local butcher, it wasn't just all these huge franchises that ship out all these products, and it's about margin and how can we make this cheaper. So let's just fill it up with, soy protein isolate. People won't notice. Crazy stuff. Again, let me know what you guys think about it below. Is this a symptom of greed and profits? Now, the US actually had a good jobs number. So beating expectations, 266,000 jobs. Their economy continues to chug along as one of the cleanest dirty shirts in the laundry. Global GDP versus equities is the chart we've got on the screen. And we did see that sharp sell-off, but what happened? Central banks did their backflip, and now the fundamentals would say the stock market is a lot lower. But just because GDP slowed down, fundamentals are out the window, central banks are printing money again, equities are going up. It really is crazy, isn't it? Now, this is the part I wanted to get to, a really important slide today about the impact of tariffs. And we see in these areas where tariffs have been implemented, particularly in those categories, prices of goods have gone up. So, this is a reading of 3 or 4% in a year. Now, that hits the hip pocket of those that don't have a lot of money, disproportionately. So this is why tariffs are, again, just going to strain people. And at the end of the day, it's all well and good for these governments to come out and act tough and slap tariffs, but it's the people that they're hurting. So the world's largest pension fund has stopped lending of their shares to short sellers. So if you know how to short, you need to borrow the shares or the crypto off a broker and exchange and make your bet that it's going to go down. Now, everyone loves the free money and pumping up these markets, but now that people want to bet it's going to go down, they're saying, no, sorry, we're not going to let you do that. And in Australia, this actually happened during the GFC when markets were crashing. They said, oh, well, no, sorry, you can't short because that might make it go down further. We don't want that. So, these markets are all just smoke and mirrors. It's all an illusion these days. Now, in Japan, they've actually had a slight uptick in their yields. They've gone from, pretty deeply negative back up towards zero here. And what are they doing to combat this? They don't want interest rates rising. They want interest rates low forever. It's been low for 20 or 30 years and they still can't get growth. They've been printing money and it hasn't worked. So what are they going to try and do again? Well, they're going to print more money. This time they're going to be announcing a stimulus package of $120 billion. They've already got debt to GDP of 250%. They already own, I think it's 90% of ETFs, the Japanese central bank. But, if it hasn't worked, why not just try printing more money? Really is crazy stuff. Now, we speak about demographics and those retirees, those funds that aren't going to be able to be paid out, but the US fertility rate is dropping. So people are choosing to have families later, having less kids, and what that means is that we have even more old people to the ratio of younger people if we're having less babies to support them and pay their taxes, governments to collect that revenue. So everything really is working against this system where we've borrowed so much from the future. Now, the world has gone bananas. I want to throw this one in there. Someone paid $120,000 for a banana sticky tape to a wall. And people think it's crazy that you can buy censorship-resistant money that's outside the system that you can send to anyone in the world for $8,000. So the Fed is expanding its balance sheet at the fastest rate since the financial crisis, yet they don't want to call this QE4 because it'll be headline on every website and newspaper in the world. Despite what you want to call it, it's pretty clear here on this chart on their balance sheet what it looks like. Now, just a reminder to you guys that we have extended our $100 Bitcoin and 10% deposit credit bonus till the end of the year. So if you want to start learning how to short, bond ETFs, stock markets, I've got a copy portfolio I'm setting up with gold, silver, Bitcoin, and some other cryptos. So this is all possible thanks to eToro, nice and easy to use. A lot of questions about this promotion. We've given away over 100 people this $100 free Bitcoin, and that 10% bonus comes from eToro. But all these frequently asked questions we've been getting are now on the website if you guys want to take advantage of that promotion. So, crypto hater Congressman Sherman is going to chair this subcommittee into investor protection. So no surprises there that we're going to see some pretty nasty headlines from him chairing this hearing into protecting consumers away from crypto. Now, a bit of conspiracy going around this week about Kelly Loeffler being appointed to the US Senate. She is the CEO of Backed. They befriended the community about how it was going to be backed with real Bitcoins. Now they've gone completely away from that, launching more cash-settled products and whatnot. Are they working with government to try and create this pool of money, all these cash-settled products, the same as the theories go around, gold and rehypothecation and these cash-settled futures? It just creates this black hole of money where as much money can go into it as it wants, and it doesn't actually change the price of Bitcoin, the underlying asset. So what do you guys think about her being appointed to the US Senate, good or bad? European Central Bank President envisions direct digital currency use. So what they're saying here from the IMF, the ECB, Bitcoin bad, our central bank digital currency good. No surprises there, but they're going to continue to beat that drum. Bank of International Settlements has taken a similar tune, saying that private cryptos, they are going to cause central banks to lose relevance. So these guys, they're going to try and do everything they can do to make themselves important. Now, Deutsche Bank have come out and actually gone against that trend, and I think maybe they've got nothing to lose. Maybe they know they're weak and they're on the brink of collapse or whatnot, but coming out and saying that crypto could replace fiat and cash by 2030 and that the system looks fragile. I don't think anyone guessed that Deutsche Bank would come out and say something like this. So do they know something that we don't? Again, let me know your thoughts in the comments below. France to test their central bank digital currency in Q1 next year. Italy upset the ECB when they were talking about doing their own thing and creating their own form of, side currency. So how all these individual nations in the EU go about tinkering with currencies and digital currencies is very interesting. I think it's causing a few ruffled feathers. We see a Borststagger digital exchange opening up to all users that are based in Germany. These guys are the second largest stock exchange in Germany, and they're now opening up to retail investors. They're a regulated token trading platform, a range of crypto assets there, so more and more on-ramps in different countries. We've seen Grape become the first STO to raise on Neurofund. So this is one of our top 50 STO projects we cover for you guys. They've successfully raised 1.4 million euro. They're going into smart bikes and devices on the blockchain there. So great to see this actually being executed and happening in the real world. Over to China, where we've seen that the Ethereum Blockchain Explorer has been blocked by the Great Firewall of China. So I'm not sure what damage going to a Blockchain Explorer does, but hey, they're pretty strict over there in China. And we've seen a large crypto mining firm in Canada announced bankruptcy. So this is the cleansing of the weak miners that aren't profitable. It's all part of the normal business cycle, and we are seeing capitulation similar to what we saw in 2018. So maybe a bit of a mini bear market that we're now in 2019. This was a great bit of research coming out and highlighting all the range of use cases for these different types of assets and then the properties of the individual assets there and what they're doing. So this was, I think, funded by ARPA, but head over and check out this report. I might link it in the description below. Block One, again in the news this week, they are launching their Facebook alternative called Voice. One thing I didn't like about this was that they said they wanted to redeem the $150 million it cost them to build this, even though Block One had a one-year ICO and raised $4 billion. They're trying to recoup their costs. I don't understand that. Am I missing something? You guys let me know in the comments below. Next up, we've got another great use case here. 3D printed parts are reinventing aerospace supply chains. So talk about up to a month to organize these parts, and blockchain getting that process down to a couple of days through the range of supply chain that these companies do use. So really awesome to see that as well. Ethereum successfully hard forked this morning. Istanbul is live, a range of efficiency improvements. Hopefully that's going to make Ethereum even cheaper to use and execute those smart contracts. We've seen Ernst & Young announce their Nightfall, another upgrade here. So ZK Snarks, this technology is going to allow for up to 3,000 transactions per second and batching of these transactions, and now that can be done at a lower cost. The largest companies in the world are using Ethereum, but they're now bullish on the public chain, which is very cool. This is something that I'd hoped would happen. BAT have now crossed 10 million monthly active users. If you haven't downloaded the Brave browser and you're not using it already, I recommend you do so. Absolutely love it. It saves you so much time and stops watching those ads. Kyber Network in the DeFi space. I've got my Kyber t-shirt on today. They're looking to increase the rewards and staking and create even further real utility. So we highlighted this project a few weeks back for our members about how it was a hidden gem in the DeFi space. It's now up 80% and I've got it in my portfolio for next year as well. Now, interesting tweet here from Ryan Adams about the Aeon founder and their recent pivot. So they couldn't compete with ETH. They said that all these ETH killers are promising great tech, but there's just no demand. And that's been my message from the start. Now, I own a range of these other coins and I think they're interesting. It's important to experiment. But unless you've got real businesses and partnerships already, you're just falling further and further behind the network effects that are created by the early movers. So interesting to see a founder of one of these projects that were competing coming out and saying, look, we're pivoting into other things. I think they're going to try, decentralize YouTube, social media platforms, and that type of thing as well. So good on them for that honesty. Microsoft have been excited about Ethereum for a while, but now we see them partnering with Engine. This is another coin we got our members into very early on. It had a huge run at the start of the year and it's having another run at the moment. Launching these non-fungible tokens on the public Ethereum chain. Absolutely awesome to see one of the largest companies in the world start to go into this space. You guys know that I'm bullish on gaming. We've seen Coinbase roll out their DAI card. Well, I'd love to see some Aussie stable coins on some spendable cards. That's something that we get requested a lot, but Maker continue to grow their network effects. We've seen SoftBank, the second largest company in Japan, I believe, launch their card with a range of wallet features and a range of currencies that they can use, from cryptocurrencies to normal currencies and assets as well. So, the race is on and the banks are joining this space. Ex-Morgan Stanley execs have jumped ship to launch their own crypto exchange. So I'm not sure we need another derivatives trading platform, but Femex here claiming it's going to be on par with the NASDAQ and do thousands of transactions per second. Again, is that going to be used for bots and high-frequency trading and manipulating the market? It remains to be seen. Now, you're probably sick of hearing about whether or not XRP is a security, but this is the last time that Ripple can file for dismissal of that lawsuit. So let's see how that one plays out. I'd love to see the back of this story and know once and for all. Great to see Bitfinex, the exchange, adopt Lightning Network deposits and withdrawals, but also teaming up with Bitrefill here for shopping. And we need more and more merchants becoming familiar with Lightning as that settlement layer. Some cool research from Glassnodes here, the stablecoin supply ratio. So the ratio between all the stablecoins and the amount of Bitcoin. So when the ratio gets really low, we know that there's lots of stablecoins out there waiting to go back into the market. And we've seen that again recently. So hitting these lows, similar to back around when the market bottomed, compared to the price. So we know that there's a lot of stable coins out there that are looking to enter the market soon. So we might be nearing that bottom. Again, this ratio of the market value to realized value, this just shows us that whenever there's a big spike in price, there's a lot of people that haven't realized those gains yet, so they take profits. So you can see these spikes and they generally lead to those corrections. We had another spike at the start of the year, but whenever this gets relatively low and we are creeping down here again, it means that people have had a chance to sell. We know that the large wallets and old hands aren't capitulating. Another sign, another piece of data. I love all this on-chain data that we are getting close to a bottom. A cool study this week showed us that millennials are holding relatively large amounts of Bitcoin through the Grayscale Trust in their accounts. Compare that to the boomers and the Gen Xers with all your household names there. Remember, every year we have more and more people that have grown up with this tech, people that have seen the GFC, people that don't trust banks, and they are going to invest in Bitcoin. Now, this comes back to my theory about the US and, is this now an attack on Bitcoin to suppress the price? Well, the SEC have approved another cash-backed Bitcoin futures fund. So they continue to deny these ETFs, but continue to approve these cash-settled products. So they're trying to divert that money away from real Bitcoin. And it is interesting that that's happening in the US when we see physically backed exchange-traded products being approved in places like Switzerland. So guys, let's get into the technical analysis. This week it is brought to you by New Brighton Capital. Take advantage of that free consultation if you're interested in setting up that self-managed super. Get the right mix of assets if you're interested in your Bitcoin, your crypto, gold, or your silver. Really low cost way to do this compared to other self-managed supers. And we've had hundreds of you guys take us up on this offer now as well. So into the TA, let's have a quick look at Bitcoin. We're stuck in this range. We've been wicking up and down. It doesn't have any signs of a bottom just yet. We haven't had the bull show up in a meaningful way. Look, last week we were hoping for a bounce. We're outside the Bollinger Bands and looking for a reversion to the mean. We got that, but it wasn't really convincing. So look, zooming out on the weekly chart now, we're still just having this little bit of a bounce. It can be all considered healthy in the broader scheme of things. We've come back and we did kiss this little area here with a bit of a wick where we'd spent a lot of time in 2018. We're hoping that would provide a bit of support. If we have a look at our cycle brackets here, if I get my lines back on the chart, let's go to the daily chart. We were looking for a bounce around the 3rd or the 4th. So we've got a bit of a push up. We now need it to hold that area around 7,200. Otherwise, if we fall back down here, I think we are every chance to make some new lows. Everyone is very bearish at the moment. I know sentiment's not good, but with all that data we've looked at, I think people are starting to get interested at these levels. Nothing's fundamentally changed. Negative interest rates and those bonds are having a bit of a cool off, but I think it all is just setting up. The ingredients are still there for a very bright 2020. So that's it today, guys. Don't forget to take advantage of that Bitcoin competition we've got every week, answering those questions over Christmas, and the giveaway with eToro. So smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.